Hey everybody, Michael Martin. Happy Monday. Hope you're doing well and you had a restful time. I'm happy to announce I'll be teaching a class on trader psychology and emotional intelligence, trader tactics, everything that you need to have a winning trader mindset. Everything that I know reduced into 12 weeks. You can email me at martinchronicle.com. Probably the best way to get the conversation started if you're interested. Those folks who have already gotten the audiobook download have heard about it. So, check it out if you're interested. I'm not a big sales guy, so I don't have these landing pages and crazy stuff. But if you're interested in something like that and you want to take it to the next level, it's affordable for everybody. Doesn't matter whether you're a day trader, swing trader, or whether you're a longer term trader like me. We're going to talk about trading or having a trading edge and defining that edge, having a trader, having goals. Also going to have Victor Sperandio step in, who was featured in Market Wizards. He traded with George Soros and Jim Rogers at Quantum Fund. So he'll do something on day trading and swing trading. Not too many times in life you get to learn directly from Market Wizard. So that should be good. So email me at editor at martinchronicle.com if you'd like to learn more about that. It's going to start in about 2 weeks. It'll run for about 12 weeks. At least an hour, hour and a half each week. We'll deliver it over Zoom. Doesn't matter the time zone. And I have a little piece of software that I can use where I can send it out to everybody who registers so that we can figure out what's the best day and time for everybody based on their preferences. So getting everyone on the same page is actually the easy part. So today, let's talk about trading edge. I think if you ask 20 different traders what their trading edge was or is, you'd get 20 different answers, right? And that's the uniqueness of it all, right? So some folks have a really good feel for the market. Other folks are really good at understanding the data and quantifying stuff like that. Other folks are really good chart readers, although it's harder, because everyone's looking at the same chart. There's not a lot of uniqueness to a daily candlestick chart. But there's a million ways that you can define it. So don't beat yourself up if you haven't gotten it yet, because most of the trader's edge comes from the experimentation and from the actual doing of the trading itself, which is kind of why I've said from day one, just get into the game and start figuring it out, because you can't get your edge. It's not going to come probably from reading charts. It'll come from the way you trade the chart, if that makes sense. So, for example, a certain chart pattern, call it head or shoulders, up or down, anyone can identify that. A friggin' fourth grader can. But that in and of itself is not a trading edge. You see what I'm saying? So, you might have a preference for being long or short. You might have a preference for trading options. And so your trading edge is going to come from your ability to look at that data point, right, or several of them, and then affect the transaction, right? You might have an uncanny ability to enter the market with really, really good timing. You might have a good, like I do, a good sense of when the trade's over, right? To get out with the maximum amount of gains that you can possibly get. And I'm not trying to say that you're going to bottom ticket and then sell at the high, but I have a good sense of knowing when the party's over. I don't typically get out at the very, very top, but I kind of have a sense when the market's going to break. Admittedly, V bottoms and V tops are awfully difficult, I think, for anybody to do that, but that's part of trading too. If I had to define it myself, I would say I have a really good feel for the markets, but that comes with 35 years. I think if you do anything for 35 years, you're probably going to get a feel for that too. You ride a bike for 35 years, you probably have a real good feel for that. So I feel I also have a sense, because again, after I had already gone pro, I had some pretty good mentors who you probably have heard of, and I developed a further sense of seeing where there were asymmetric, payoffs. Where would people be caught off guard? Where were people going to underestimate certain things? And so it doesn't happen every day, because you really have to look over a lot of charts of stocks and futures or this and that, whatever it is that you trade. And then, you have to have the guts to put on the trade, because these things typically don't, they're not glaring off the screen, right? You have to really think about the situation. What's the mindset? You know what I'm saying? Case in point, if you go back to look at the video that I did with Brian Shannon, there were several outlier events within that video right there that we talked about. I put those slides together, right? So you can take a look. He, of course, was speaking about anchored VWAP, and so I'd let him do the talking as well. I should, because I think that was a very undercovered indicator or a sense of technical analysis. And so really it was his show to have for the most part. And I know other shows can cast a bigger shadow, but the point is that I want to try to introduce these things to you because they can be very, very material. They're very helpful to you. So don't feel frustrated if you don't know what your trading edge yet is, because it's going to come with experience. You're not going to get it from a textbook probably. I know I didn't, and I read every damn book you could think of. But what the reading of the books did was inspire me to want to try certain trades to see how they felt. Because ultimately, if it doesn't feel good, you got to change the man. You got to change the man, right? So you have to learn how to put the trades on, and you have to, see how they feel. What do they compel you to do? Also, I think it's very difficult to have or take advantage of these asymmetric situations if you're doing things on the shorter term. Especially if you know that you're lifting your winners at 3R. You know what I'm saying? So by asymmetric, I'm thinking more like 5 to 10 to 1, right? Things that really pay you. Otherwise, why would you do this for 12 or 15%? I mean, I know you'll take it. So would I when I was starting. But I think I'm going to talk about this week. How do you manifest exactly what you want? And when you go back and you review your goals, it's one thing that we also do in the coaching program is, why did you choose the numbers that you did? Did they just sound good? Right? Because 3 to 1 sounds good, especially if you have 50-50 winning and losing percentages. But where'd you get that number from? You can't just pull it out of your ass and be like, okay, this is my number. You have to actually try it on for size and see what it feels like. Two, there's another thing that hurts people in that the asymmetry doesn't necessarily come from position sizing. I speak with a lot of folks, and one of the big laments from newer traders is like, I want to get bigger. I want to get bigger. I want to get bigger. It's like, all right, so does every guy, right? But at the end of the day, trading size is where we make and lose money, but it is, I don't think position sizing is where the edge is. You might have an ability to understand how to position size across several different asset classes, given options delta and this and that. But that would, to me, would be a more advanced topic. It wouldn't be for folks who are, newer, 3, 4, 5 years experience. So position sizing isn't as big a deal. And maybe I'll do a video on this, but you can grow. I was looking at some like ATRs on commodities the other day, and I put them down on a spreadsheet again, just because I like cranking the data. And I was thinking about how much rate of return would it take you to go from, say, 3 contracts of a certain commodity to 6, given the prevailing volatility, because most of the time you're not doing things on a discretionary basis where you're just choosing a number and trading 5s and then going to 10s. Like, that's a massive jump to double your position size. And so you see guys trading for like a month or two, doing like 1s and 2s, and they're like, yeah, man, I got my confidence, which is meaningful. And then they go right to 5s, and they have drawdown, and they become discouraged. And I think in terms of what your trading edge is, if you try to get too big too fast, you almost stunt your growth, believe it or not, which is counter emotional when you think about it. So anyway, I did this one study where I showed that in order to go from 3 contracts to 6 contracts, you would have had to have grown your account 80% as a rate of return in order to double your position size. And some of you are up 5, 10, 15%, and you're going from 1s to 5s, you're going from 5s to 10s, and it's too big. Your account or your position sizing, since we're on the subject, really has to grow proportionately with your account size, because your bet size should be constant. You should always have like 0.5% or whatever that number is, and keep it there. And then be aware and be mindful of what the volatility of the instrument is that you're trading within the time frame, or the time frame that you're trading. So I would say I have a sense of knowing when to get out of a winning trade, again, which comes from years And I wish I could tell you that it happened quickly. It didn't. It didn't. I'd be lying to you if you was like, yeah, man, you just figure it out. It doesn't work that way. So anyway, that's the stories. I have a good sense of when to exit a winning trade. I always honor my stops. I don't know if that's more just about discipline than it is having a trading edge. And then I have an uncanny ability, again, after looking at things, especially early on in my career, of looking at trades that had huge payoffs and I missed them, right? Because those can be very painful, especially if you've been looking at the chart and you're like, oh my God, I was just looking at this the other day. It's up how much percent, and I wasn't in the trade. Like, what did I miss here? So I had to learn to look for things that weren't so obvious. And talk about that in the group coaching as well. So anyway, let's leave it for that. Let's leave things where they are right now, and we'll talk more about tactics and trading edge, this and that. Again, if you want to learn more about the group that we're putting together, we're going to limit to a handful of people just because I want everyone to get individualized attention. Don't want to have 50 guys, gals on the show, because then it's it's not fair to everybody who's participating. You can't give them ample attention to help them grow. So I like to kind of keep those task forces very, very small. Anyway, please like and subscribe. If you'd like to learn more about the group coaching, email me, editor@martinchronicle.com, and I will see you all tomorrow. Take care. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.